Welcome to the Thursday edition of the Tech Stocks Daily Podcast. Grab your gadgets and perk up those ears, because today we're diving into an action-packed tech universe. Zscaler is riding high with stellar third-quarter results. Revenue soaring like your heart rate when someone unplugs the Wi-Fi. Synopsys is flexing with a potential mega merger as it cozies up with Ansys, all amidst a roller coaster earnings report and geopolitical challenges. And let's not forget UiPath, which is unleashing a new wave of automation while dazzling investors with some jaw-dropping growth forecasts. Ready to uncover all the excitement and snag some juicy insights for your investment journey? Buckle up. Hold on to your keyboards, tech enthusiasts, because Zscaler is making waves in the cyber sea today. This giant of cloud security is basking in the glow of its freshly released third-quarter financial report, which rolled in hotter than your laptop after 5 hours of high-resolution gaming. Kicking things off, Zscaler dazzled everyone with its third-quarter revenue of $678.03 million, outstripping the market's slightly more modest expectations, which were pegged around $666.86 million. Not only did Zscaler leap over the revenue hurdle, but it also cleared the earnings bar with flair. Adjusted earnings came in at a robust 84 cents per share, surpassing analyst forecasts of 75 cents per share. That's like getting an A+ when you thought you were set for a B. But wait, there's more. Total revenue shot up by 23% year over year, proving that Zscaler isn't just coasting, it's on a growth roller coaster. Deferred revenue upped its game by increasing 26% year over year to $1.99 billion, while calculated billings took a healthy 25% hike to reach $784.5 million. It seems that Zscaler's clientele is not just expanding but investing for the long haul, ready to binge the cybersecurity buffet. And even though free cash flow saw a tad bit of shrinkage, falling to $119.5 million from $123.1 million last year, Zscaler still stands firm with around $3 billion in cash equivalents, and short-term investments. That's a comfy cash cushion for tackling whatever cyber tomorrows might hold. CEO Jay Chaudhry is understandably chipper, talking about the company expanding its zero-trust exchange platform like it's the hottest club in the tech universe. And who's coming to the party? None other than Kevin Rubin, freshly appointed as the new CFO. Rubin steps in with a history of making numbers dance elegantly from his time at BetterUp and Alteryx. He'll be mastering the financial orchestra as former CFO Remo Canessa steps back into sunny retirement, sticking around until the fiscal year's end to pass the baton in style. But wait, Zscaler isn't just resting on its digital laurels. The company is sinking its teeth into artificial intelligence with Zest, boosting its investments to ensure customers can leap onto the AI bandwagon securely. AI now doesn't just stand for alluring income, but also the secure adoption of both public Gen AI apps and clients' private AI endeavors. Looking into their crystal ball earnings call, Zscaler unveiled its forecast for the next quarter, anticipating revenues in the ballpark of $705 to $707 million and adjusted earnings per share between 79 and 80 cents. They then set their sights even further, targeting a full-year 2025 revenue window of $2.659 billion to $2.661 billion. So there you have it, folks. Zscaler's not just swapping out CFOs like it's the quarterback of a billion-dollar cybersecurity Super Bowl team. It's also steaming ahead with top-tier financial results, ready to surf the waves of innovation and opportunity. Keep your eyes peeled. Zscaler's just getting started, and this isn't an episode you'll want to skip. All right, tech lovers, buckle up, because Synopsys, the big kahuna in electronic design automation, is making waves with not one, not two, but a trifecta of intriguing developments. First up, let's dive into the market dynamics. Synopsys' stock was on a bit of a roller coaster today when shares spiked by 5.5% thanks to some promising news regarding their massive $35 billion acquisition of Ansys. This move showcases Synopsys' strategy to dominate the sector by joining forces with the simulation and analysis giant Ansys. The Federal Trade Commission has given a thumbs up to the deal, albeit conditionally, narrowing the path for what could be a game-changing merger. Once China approves, this acquisition could lock together a powerhouse pair set to redefine semiconductor and simulation technologies. On the other side of today's financial theater, Synopsys reported their Q2 2025 earnings, and guess what, friends? They exceeded expectations. Their non-GAAP earnings climbed a cool 22.3% year over year, raking in $3.67 per share against an anticipated $3.39. Revenue jumped up by 10.3%, reaching an impressive $1.604 billion, largely supported by their time-based and upfront product segments. It seems like Synopsys is revving up its engines on all cylinders, driving profits and proving to be a robust player in the tech arena. But don't pop the champagne just yet. There's some tension in the background. Synopsys, along with its peers in the EDA world, is under the scrutiny of new U.S. export curbs targeting technology moving to China. The government's move aims to put a crimp on China's access to software, including the kind Synopsys produces. Despite the looming regulatory storm clouds, the Synopsys team led by CEO Sachin Ghazi remains confident. They've yet to receive official word on these restrictions, and their upbeat forecast suggests they're ready to adapt and thrive. And just as we pivot to a fiscal note, Synopsys announced an adjustment to their fiscal year setup which aims for a more streamlined accounting. This shift means jigging the fiscal year-end date, promising a neat and tidy calendar alignment. Overall, the mood music surrounding Synopsys is upbeat, with investors observing a strategic focus on artificial intelligence, software-defined systems, and all things silicon. Their message is clear. Amid micro and macroeconomic challenges, such as the tech skirmishes with China and global market volatility, Synopsys holds a steady course toward innovation and profitability. So there you have it. Synopsys is flexing its corporate muscles with strategic growth, surpassing earnings expectations, and navigating international regulatory waters like a savvy sailor. Let's stay tuned for how these currents will shape up for Synopsys in the coming months. Today, we're diving into why UiPath made headlines and put on quite the show for stockholders and tech aficionados alike. Buckle up, techies. It's an automation sensation. UiPath's stock surged in after-hours trading, skyrocketing by around a whopping 5.95%. The cause for this market enthusiasm? A delightful cocktail of better-than-expected results for their first quarter and some eyebrow-raising, optimistic guidance for the full year. Picture CFOs and investors doing a little jig. It's a raise-the-roof type of day over at UiPath headquarters. For a quick, number-crafted appetite whet, let's look at the stats. UiPath saw its total revenue shoot up by 6% compared to the same quarter last year. Their annual recurring revenue hit a formidable $1.69 billion as of April 30th, representing a 12% increase year over year. That, my friends, is what we call growth with a capital G. If UiPath were a high school track star, it'd be breaking records, left, right, and center. So, what's fueling these nice digits and dollops of investor happiness? The company has launched a new product evolution in their signature style, an agentic automation platform. CEO Daniel Dines emphasized that this launch was not just a standard business maneuver, but a milestone, enabling early positive responses from customers, partners, and industry peeps. It seems everyone's vibing with agentic automation these days. UiPath also bolstered their fiscal roadmap, bringing sunshine to investors' weekends by elevating their full-year revenue forecast. Now, they're aiming between $345 million and $350 million for the second quarter, a healthy notch above the previous $333 million estimates. UiPath's fiscal 2026 outlook was raised too, stretching it to $1.549 billion to $1.554 billion compared to earlier forecasts, an enthusiastic financial paddle up from $152 billion hopes. What fuels their future rocket ship ambitions, you ask? Executive officers like COO and CFO Ashim Gupta are charging progress with a AAA-rated strategy: autonomy, automation, and amazing operational discipline aimed at sustainable growth. UiPath's management chimed in on their dreams of dominating more market space over a conference call, as beans were spilled at 5 p.m. ET sharp. Not to mention, their current resource pile includes a cushy sum of $1.59 billion in cash, cash equivalents, and securities. Dive further into this ocean of insights, and you might as well tow in fresh strategies for investing. UiPath stock could be the map you didn't know your portfolio needed. So, that's a wrap on how UiPath is turning heads in the Wall Street corridors today. I'm curious, what do you think about agentic automation? Does UiPath's stellar performance inspire you to rethink your productivity strategies? Or maybe reevaluate your investment portfolio? Share your thoughts, expert critiques, or any wow moments from today's tech journey in the comments below. Spark a conversation. Let's continue exploring this fascinating universe of technology together. All right, let's spotlight Zscaler in the dazzling glow of today's headlines. Is it a buy, a hold, or a let's part ways? Given the compelling third quarter performance and the bolstered momentum in its financial results, Zscaler is decidedly giving off strong buy vibes. Why, you ask? Well, let's break it down. First, they smashed revenue and earnings expectations. $678.3 million in revenue and 84 cents per share in adjusted earnings blew past what the analysts predicted. That's not something you see every day, so when it happens, it tends to signal that the company is on firm financial footing. Plus, with a year-over-year revenue jump of 23% and solid growth in deferred revenue and billings, Zscaler is not just treading water, but jet skiing forward in the cybersecurity sector. The fact that they also have a nice cushy cash reserve of $3.01 billion doesn't hurt either. Cash equals power to invest in more growth or to weather storms should they arise. Adding to the spice, the company's keen dive into AI developments as part of their growth strategy shows they're not just playing it safe, they're pushing the envelope. Leaders who can innovate and align with emerging tech trends effectively secure spots high on investors' lists. New CFO Kevin Rubin's track record oozes potential for continued smart financial guidance. The optimistic future earnings forecasts, revenues of $705 to $707 million next quarter, dangle a tantalizing carrot over current performance. If realized, these projections bolster Zscaler's credibility further and shower shareholders with potential happiness. But as much as this sounds like latex-free pizzazz dipped in gold leaf, remember, dear listeners, that investing ain't all ticker tape parades. Every investor needs to exercise their own judgment. Dive deep into the currents shaping your investment strategies. Understand the ultra-dynamic tech world and how it maps to your risk tolerance and long-term pursued gains. So, I'd lean towards a buy call on Zscaler, given their excellent signals. But remember, this should prompt you to kick into research-fueled gear. Keep those investing lights clear and your portfolios sparkly. Personal due diligence is your best tech companion. What an electrifying day on the NASDAQ. We've seen Zscaler soar with stellar financial results, Synopsys make bold acquisition moves while beating earnings expectations, and UiPath rocket upward with impressive growth and product innovation. Each company not only delivered noteworthy performances, but showcased their strategic adventures in the vast tech landscape. If you've enjoyed this deep dive into today's tech wave, don't forget to like, subscribe, and share the video with your fellow tech enthusiasts. Catch you all tomorrow for another tech-tastic update. Same time, same channel.